All right, so thank you everybody for joining me here today. My name is Gabriel Brent, and I've been a trader for really like the last 16 years. I've been looking into investments and everything, and then I started day trading about 8 years ago. So been doing this a while, and really what we're going to be sharing with you is just some of the cool fractal natures and the cool things of the market that I've figured out over time. So let's go ahead and get started here. So I've told you a little bit about myself. If you would tell me a little bit about yourself, I think that would be absolutely awesome. For instance, how long have you been trading? Have you been doing it as long as I have? Maybe even longer? Or are you just now starting off in your venture of day trading? Or day trading, swing trading? I do a little bit of both, actually. So I shouldn't say a little bit. I actually do a lot of both. So, all right, guys. Well, thank you so much for voting there for me. And speaking of what type of trading we're doing here, what type of trader are you? Are you guys day traders, swing traders, a little bit of both? Maybe long-term investments into stocks, 401ks? I can understand all the above, you know? Everybody has different goals. All right, well, thank you guys for voting. I really appreciate that. And looks like we got about 50% day traders and then a few investors in here too. So that's cool. So, all right, so I'm going to go ahead and close that poll. Hopefully everybody can see my screen just fine there. All right, good deal. So we're going to be doing something a little bit different. Most of the time we talk a lot about what Apizones is and where we started off with, but today we're going to start off in a little different note, okay? Now, what I'm going to begin with here is really a basic call to price action, okay? And we're going to start here just on some basic minute bars, okay? And as we look at these minute bars, what I'm going to share with you guys is an understanding of why the market's doing what it's doing, and more importantly, how we can take advantage of a very simple concept of when price fails to do something. Now, why is this important? And I think that's a good question to ask of why is this important? Well, when does price tell us that it's done something or when it has failed to do something? And this is a little bit more advanced, okay? I'm going to give you that. So if you're a brand new trader, which it looks like we have mostly more educated people in here with 5 years plus of experience, so I think that's really cool. But what I'm going to be looking at is the basic fractal in the markets, okay? And what that tells us, all right? So basically what we're going to be starting off with is let's look at the market and as it oscillates up and down here on the big time frame. Okay, like this thing is going back and forth and back and forth, up and down, puts in pivots, puts in swings, all this kind of stuff. But how do you know when to act on something? And I find that a very basic question, and you know, like we're all supposed to be buying low, selling high, and I know that with the zone software, you know, we can identify where that low and high is, but when do we know when to act on something? And I think that's basically, it comes down to a very simple principle of when has price told us that it has done something or that it has failed to do something. All right. Now I'm going to go and I'm going to simplify this chart even more. Okay. And we're going to take off the bars and we're going to go into a line graph. All right. So what does this line graph tell us? Well, I think it tells us a lot. And all that I'm really looking to capitalize on here is when is price telling us that it's failing to do something, right? And that's when it's going to say like, hey, that's when I want to act, okay? If you go back to the whole true and false type of idea, okay, when has price made a new high or a new low? Okay, price made a new high up there, okay? And now when has it made a new low? Well, depending upon everybody's perspective, maybe when it crosses below this point, maybe when it crosses below this point, Maybe when it's crossed the low of this point, maybe that's when you say price has made a new low. All right, everybody's going to be different based upon the different time scale that you're looking at. But because everybody's going to be seeing that a little bit differently, we need to take it and simplify it just a little bit more than that. All right, and when we have a new high, what I'm looking for is basically a wave oscillation. All right, that's what I'm going to be looking for. And that's what this Apizone's price action failure indicator does for us. Okay, so as we come back here to the indicators, and again, this is on every single platform that we support, for NinjaTrader, TradeStation, Sierra Charts, all the above. All right, you can find it on our main website. And really what it goes back to is a very basic understanding of price action. So if you're brand new to price action, I really recommend that you check this out to understand more in this concept. But I'm just going to show you the cool tool that's resulted from a lot of time in front of the charts and how we can make it simple. Now this is a price action school, and I just wanted to share with you guys this because this is a 4-week class of teaching you the basics and what we're going to be talking about here of why this is working the way that it does. All right, so we have a very special thing going on here with the price action school that I'm going to get into a little bit later, but that is the page for the price action school, and let me put that here in our chats real quick. Okay, just so that you guys can browse that at your leisure as I'm explaining to you what we have going on here. Okay, now I applied the price action failure to this chart. Okay, now what does this represent? So let's go take a look at this high up here, and I don't know why I'm looking at this high particular. It's just a high. Okay, it's made a new high. But how do we know when price is going to not put in a new high after this point? Well, it comes down to what this software is doing here. This thing is just drawing these little lines, and these little lines here are lines in the sand, all right? And those lines in the sand represent when price has failed to make a new high. All right, so after that pivot gets put into place, this little line is going to be drawn, and this is truly the bar that is going to be drawn on. So if we go back to our bars, okay, and I'm going to do it like this, all right, I just put on the bars, and you can see that this little line drew right there. All right, now what is so special about that? Well, for me, that is the first indication that this is going to be a pivot. As soon as this little line draws and we close below this little line, that is the actual sign of a pivot being put into place. Okay, same can be true for the green lines. All right, this is when price tells me it has failed to do something to the upside and price is closing below this. All right, and that's when a pivot's going to form. All right, so it's a real simple little idea. Price closes below this pivot, like so, and then you can measure out the risk as that happens there, and we can put down a one-to-one type of target from that point down here. Okay, so, and if you look at the Y value here, you'll see a negative 2.5, a Y value of 2.5 there. That's just the Y value, okay? That's what we're measuring. It's 2.5 points on this particular market to get below that point, to where price closed below the PAF, or the price action failure, and then we can see price really accelerating the move in that big red bar that almost did it in one bar all by itself, okay? Not quite, but almost. All right, so that's the type of thing that we're looking to do. All right, so it's a real basic little pattern, but it's really amazing how well, when you take this stuff in the direction of the overall trend, how well this actually works out for us to really gain an advantage in the marketplace of, if you know where the pivots are going to form before they actually form, and like if this close right here is saying, hey, price is going to form a pivot up there, then that is a way to mitigate risk, okay? Because you know that a pivot's forming there, And let's just say that we know that we're in the direction of the trend because of XYZ, all right? And we can say, hey, this is simple. I'm taking a 1-to-1, or maybe you take a 2-to-1 or something like that. You look at where the next swing point is down here, or you look at where the next zone is, considering the zones should be somewhere down in here as well, okay? And you can just take that quick little idea and take it with the trend, and it works out really nicely here. Okay, so now this is one that it works out really nicely, and obviously there's a lot of red lines and a lot of green lines here, so we want to be able to filter those out, all right? And that's why software like the Elite software exists, so that we can be looking at these lines in the direction of trend. All right, so is this the end-all be-all system? Because all that we're really trying to do in this whole scenario is capture a lower high or a higher low. All right. Now with the price action failure, because, well, like in this example here, it was plotting right there. All right. And we can see price did a little bit of a jostle. It doesn't look like this one. Like this lower high doesn't look like that, but it gave us an extra little jostle, and then it accelerated down. All right. So if we're looking at risking a certain amount, technically we could be risking that Y value of, let's say, 15 ticks, all right, to make 15 ticks to the downside at least, all right, or until we see another one of these type of lower high areas, and that's exactly what we see price doing. Yes, it did come up here. It gave us what I like to call a double top, okay? And then it accelerated back down. And as soon as it found that 15 ticks of difference there, then it oscillated back up and that kind of thing. What the price action failure does really, really well is it allows us to simplify our entries, okay? That's all that we're looking at doing. Now, yes, I believe that we should have an idea of context. Where are we in the grand scheme of things? Are we trending up? Are we trending down? Are we sideways? But once you know what you're doing in the market in general, then you can use this to really see where good entry points are. Okay, now, personally speaking, I'd love to use this indicator just for my entries, all right? Because by identifying that higher low, and when price closes just above that candle right there, it allows me to get on, and let's just say that the trend was up, or I'm looking at a counter trend play, and for whatever reason I'm going to the upside here, okay? When that close happens above that point, then I say, hey, I'm going to risk to the pivot point, because I know that this now is a confirmed pivot, and I can say, okay, I'm risking, let's say, the Y value of 16 there. My first target, I'm going to be looking for 16 to the upside. And I like to do a 1-to-1 target, just me personally, because as soon as I get that 1-to-1 target, then I can feel like, hey, you know, I've done my job. I've done all of these things correctly, and I saw the pivot get put into place. The price action confirmed that pivot being put into place, and now I roll in the opposite direction. Okay, prices told me it was failing to do something there, and now the opposite must be true. So it just allows me to simplify what I'm doing. All right, now I'm going to show you another really cool power technique that I've found over the years with this thing. Okay, you see how these two green lines are really close to one another on this chart. Okay, first off, the proximity of two green lines or red lines, okay, and the most recent line needs to be equal to or less than the previous line. And when they form like this together, I like to say, hey, that is like a double PAF, and when price closes above a double PAF, watch for that market to accelerate, okay? So lo and behold, in this case right here, we see price closing above those two bars on this candle right there, All right, now the reason why I'm liking the range chart and why I do a lot of my entries off of range charts is just because every single bar is a given size of price movement. And that's a beautiful thing, all right? Because we're looking at lower highs, higher lows type of idea, okay? Every single one of these bars is 5 ticks big, all right? And that allows us to simplify, hey, I know that if I'm moving 3 bars up, it's probably going to be 15 ticks, all right? And if we're closing above 2 PAFs in this type of direction to the upside, then watch out and look for this thing to accelerate in a very dramatic fashion after that point. Okay, same thing is true over here. See this PAF right there, forming right there, and then a higher PAF of red also forming. As soon as you get the close below this point, look for a quick acceleration to the downside. All right, now this is something that we teach in the Epizones community, and it works really, really well, all right, for the most part. And if the quick acceleration doesn't happen after price closes below 2 PAFs, like if price, and here would be a signal right here that doesn't work, okay? PAF1, PAF2, and price closes below this, but price also gives us a PAF3, okay? Now, this is not a valid signal because that should not have printed the PAF right there, okay? And we don't do the PAF that's 2 red PAFs, one that's the most recent one that's below that one right there, okay? And since price didn't close below these 2 PAFs before that third PAF got into place, then this is a no-go, okay? We're looking for previous PAF, most recent PAF, and then go, all right? Nothing happened there. Oh, look at that. And now we have a third PAF right there. So, and these 2 PAFs, they need to be relatively close, all right? If we're on a 5 range, I want them to be like 5 ticks apart from each other or less. This one happens to be 3 ticks from this PAF to this PAF. And as soon as we get a close below this point, which would be on this red bar right here, okay, then we go. And if price doesn't accelerate down really fast and hard from that point, then you're probably not in the market condition that you should be in, all right? And you're probably going to spend some time chopping around. And it did actually happen, okay? Price closed below both of these 2 PAFs. Actually, I'm sorry about that. Price closed below the 2 PAFs right here. Let's just use the most recent pivot to the upside, which is up there. So 13, and then I'd be looking to make 13. So 13 to 13 it takes me down there. It did happen, okay, but it took several bars for that to play out, okay? So just be on the lookout for how long it takes price to go that distance to make that 1-to-1 ratio, okay? So let's come back here and look at some more examples because I just want to show you examples of this stuff working, all right? Because this is really one of my favorite setups, all right, just to confirm price is doing what we think it's doing. Okay, so we have one PAF here in green, the second PAF that's lower. I want it to be within 5 ticks. Ooh, this one's 9, all right? So because that's 9, that's not really all that cool. All right. Now, this doesn't take into context the zones or anything else that we like to use to give us context of trend, but I do recommend using this setup in the overall direction of trend. All right. Okay, so here's 2 of them together, but if we measure them, that's 8 ticks. That's not within the 5 that we're looking for, so that would be a no-go. There's 2 that's within like 1 tick of one another, but then price makes a new high before it closes below this point. So that's a no-go, okay? Because price took out that high right there, then it's a no-go, all right? So this this price action right here, yes, it drew in the line, so we could get a ready, set, go, to be right in there. But then it puts in the new high, and that negates the trade. Does all this make sense? Okay. So this is how I have really mastered this price action failure idea. Okay, so price closes below this one and it closes below this one. Let's make sure that the number of ticks in between those two is 5 or less. It's at 4. And let's make sure that the previous high that's formed in between this one and this one is still in place. So price never goes above that point there. So that's 15 ticks of risk when price closes, or to that PAF, price closes below at that point. So I'm risking 17 ticks when price closes below those two. So my target needs to be 17 ticks. And that's exactly what happens. Okay? And we get that over here. All right, so this is one of my favorite setups. I also like to just use the PAF in the direction of trend, especially when they're bouncing off the zones. Okay, so you can see a zone forming up here, and it bounces and it leaves and it bounces again and it leaves. And so when price leaves right there, and let's just say that our direction of the trend is to the downside, then as soon as price closes below that PAF, we can be hitting the sell button. Okay, risking 11 to make 11. That's what I like to do, and that's just my personal style. Okay, so that's the way that I use this a lot, is just to confirm the zones. Okay, we see price create another purple zone right there. It closes below this point, so you could actually take that one too, but that one's 16. So you'd have to go over to 16 over there. Got a lot of chop, but it did it. Okay. Or if you want to, maybe you would have taken it right here. Okay, now it just so happens that the zone forms right there as well as the PAF forms right there at the same point. All right. So you could take this one, risking 17 to make 17 like so. All right, so this is how I use the PAF in combination with the zones. All right, now with the methods package, which is what I'm going to show you here, you see the little green diamond here? Look at where that green diamond's forming. Forms as this green candle plots. Actually, it's a pretty opaque candle just because of the way that I have my bars colored. All right, but if we show the zones, price created the zone over here, bounced off the zone, there's a PAF and a diamond forming as well, okay, on both of those two. On that one bar, both the diamond and the PAF formed at the same time, and it could have given us an entry to the long here, okay? So that's the kind of stuff that I love to see happening. If we look at the previous diamonds, okay, if I show previous diamonds, you'll see a lot of this stuff happen. Look at all the bounces off of this brown zone down here, okay? Now, how do you time your trades with this thing? That's an excellent question. Okay, so let's look at where does price go above a green PAF and also give us a diamond on the same bar? No, 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 no. Boom, right there. That's where everything came to place. And look at, if we would have taken and waited for both of those things to play out there, then we've actually not played in any of that chop stuff until it was really ready to rock and roll, okay? So let's say that we risk all the way down here to the bottom of this zone, okay? Let's just say that we're doing, or if you wanted to do the pivot, you could do the pivot too. but let's just say the bottom of the zone, bang, bang, boom, 14 to make 14, and you got your first target right there. Okay, that's what I like to do. All right, good deal. So this is the price action failure mixed with the Epizone's methodologies. All right, so let's talk a little bit about the software here. All right, now if you want to understand more of why everything is happening, I recommend that you check out the price action school. But as you join with either the methods or the PAF indicator, if you decide to use them in tandem, you'll get access to the My Account section here on the back side of the website. If you have the mentorship bundle, you can see some of the different lessons that we go through there. You get access to the PAF indicators and all that kind of good stuff, as well as the cheat sheet, which is going through some of the setups that we have going on there. You also get access to the video library. So this is basic money management, trading psychology, reading context. If you want a trade plan to copy, you can copy my trade plan or some of the other successful traders here that we have trade plans of. And just to show you a little bit of what the mentorship does, we teach you all these types of concepts and ideas, like understanding trend and trend change. And so you go through these videos, you watch the videos, you do the homework, all that kind of stuff. Okay, so that's what's happening inside the Epizone's mentorship. It's more of a one-on-one thing. Again, going through the price action school, you're going to get a good example of what that looks like and how that acts. All right. Now, here is the software here today, and we're going to do a big special promo for everybody in attendance here as well today. All right. So if you come over here to Epizone's Get Started, we want to make things very, very simple for you guys to do. So for today only, we're going to be doing the price action school, all right, which is that 4-week of mentored class that teaches you how the zones work, how the software works, what we're doing here, access to our Skype room, all that kind of stuff, all right. And it's also bundled with the methods package, all right. So you're going to be saving $170 for this right here today, all right. And this is a special link for that page, all right. So it's the price action school plus the mentorship, or I'm sorry, plus the methods package here, all right. So it's both of them together, and this is the special that we have going on today, all right. Now, the other thing that you can also do is we've been talking a lot about the price action failure tool, so you can also check that out here. Just click on the link there, and the price action failure tool is actually an independent product. So to buy that, you just click that right there, and you can get started with that as well.